us. We're going to a statement issued by the IFS, Institute for Fiscal Studies. Then we'll speak to them on it. But first, Adam will take us through the Goldbod. A few things you need to know about not only the Goldbod, but the predecessor organization.
Good.
Because, okay, so you go take us through.
So we'll start with the domestic gold purchase program.
Domestic gold purchase program.
Yes, that's where the whole thing started from.
Okay.
What is it?
Okay.
The domestic gold purchase program, DGPP, was a Bank of Ghana-led program announced in 2021 to buy domestically produced gold.
Okay. Bank of Ghana-led project.
Bank of Ghana-led program.
Okay.
Announced in 2021.
Okay.
To buy domestically produced gold.
Okay.
It began as a reserve building and foreign exchange strategy when Ghana faced weakening reserve buffers, exchange rate pressure, and higher external financing.
Okay.
It focused heavily on doré gold from artisanal and small-scale mining, but also involved refined monetary gold as part of reserve management.
Okay.
The program later became the foundation for both gold for oil and gold for reserve transactions. So why the DGPP was introduced? Build international reserve by converting domestic gold into foreign exchange and monetary gold.
Okay. Reduce
pressure on CD by increasing formal foreign exchange inflows from gold export. Formalize more of the small-scale gold trade and reduce smuggling by giving miners and aggregators a state-backed buying channel.
Okay, so go back to that. Formalize what?
Formalize more of the small-scale gold trade.
Okay.
And reduce smuggling.
Okay.
By giving miners and aggregators a state-backed buying channel.
A state-backed buying channel.
Yes.
So that there's a part of it that talks about. So I want you to go back to the objectives again.
Good.
One after the other.
Good.
Because this objective is also important.
Good.
In this discussion. So start from the very first beginning. What was the first thing they wanted to do with it?
Build international reserves by converting domestic gold into foreign exchange and monetary gold.
Okay. So remember the matter of GANRAP. This government is trying to build our reserves to 15 months of import cover.
Yes.
Okay. So this was also part of the thought process. I'm not saying that they were thinking where the Ghana people are thinking, but they were thinking about building reserves using the receipts from gold.
Yes.
Okay.
Reduce pressure on the CD.
Of course.
By increasing formal foreign exchange inflows from gold exports.
Okay. So what they were trying to do then is we've seen a lot of results in 2015.
Yes.
Reduce pressure on the CD.
2025, you mean?
2025. Reduce pressure on the CD.
Yeah.
What we are trying to do is use the monies we get from the sales of gold.
Yeah.
That's foreign exchange.
Yes.
Use it to deal with the problem of the dollar, the unbelievable problem that concerns us to all kinds of places.
Yes.
So we want to reduce that pressure so that you can see some stability.
Yeah.
That was there, no? Okay.
Then the third one is formalize more of the small-scale gold trade and reduce smuggling.
Okay. And that's an important aspect. So 3 objectives.
Yes.
Is there another objective?
That's not the end of that one.
Okay.
By giving miners and aggregators a state-backed buying channel.
Okay. So sell to us.
Yes.
In this case, you are selling to the state. In order to get somebody to look away from smuggling, you must offer them a price that makes them feel that you are the best person to sell to.
Yeah.
Okay. So we'll get there. So is that the...
There's a fourth and final main objective, which is support macroeconomic stabilization.
Support
macroeconomic stabilization at a time when Ghana had lost access to international capital markets and foreign exchange was constrained.
That context is very, very important.
Yeah.
Because at that time, we had already gotten indications that we will struggle. If we go to the foreign market, we will pay through our nose.
Yes.
Because most investors were already suspecting that we're going to default. So if they will give us money, they'll give us maybe 15%, which is crazy.
Crazy.
You can't take the dollar 15%. We've gotten close to that, but we never. So we were heavily constrained. So this was our way of saying, because typically we can borrow to pay debt. So you borrow money, you take the money and use that money to pay old debt so that you do not default. Now we do not have that. So, but we still needed foreign currency,
yes,
to do some of the things that we do with foreign currency, including giving it to traders, among others. How do we get that foreign currency? And one of the ways was through this.
Yeah.
Okay. So those were is it 4 objectives?
Yes.
Okay.
4 objectives.
Of
now,
the domestic gold purchase program.
Yes.
Like you said, introduced in 2021.
Yes.
Okay.
How DGPP worked before Goldbod.
Okay.
How it worked
Okay.
before the arrival of Goldbod.
Okay.
Simple transaction flow. BOG provided CD financing to purchase locally produced gold.
Okay.
PMMC and approved aggregators bought Doré gold from miners and small-scale sources for the program.
Okay.
Some gold was refined into monetary gold. When I say monetary gold, I hope that's the reserve aspect.
Yes.
Some gold was refined into monetary gold for reserves.
Okay.
Other Doré gold was exported or sold to off-takers to generate foreign exchange.
Okay.
The FX generated helped BOG build reserves or support market operations.
Mm-hmm.
But BOG also carried the pricing, FX, and accounting risk.
Okay. That's an interesting aspect. So what you're saying is that BOG takes CDs in his vault, gives it to PMMC. PMMC have people who go and buy the gold for them.
Yes.
They bring the gold back to the PMMC. Part of the gold is refined and used for the purpose of gold reserves.
Absolutely.
For the bank.
Yeah.
The rest, BOG will sell on the international market. And then the money they will get, they will use it to build our reserves. Okay. There's an ending part where you talk about risk.
Yes. BOG also carried the pricing, FX, and accounting risk.
Pricing.
Yes.
Foreign exchange and accounting risks.
Yes.
Okay. We'll try to put that into some context for you later in the show.
Good.
We will not pretend to know everything. So that part I have taken note of. Pricing, FX, accounting risks.
Yes.
Okay. We'll speak to an accountant. So
good.
Okay.
So BOG and PMMC rose under DGPP.
Okay.
Who did what?
Okay.
First, BOG. That's the policy owner, funder, and reserve manager.
Okay.
It provided CD, received gold and FX, and recorded gains or losses on its balance sheet.
Okay. Go through that again.
First, that's BOG. That's the policy owner, funder, and reserve manager. It provided CDs.
So, provided the money.
Received gold/FX.
Okay.
And recorded gains or losses on its balance sheet.
Recorded gains
or losses on its balance sheet.
So they anticipate that in some cases there might be losses. So the gains and losses will go to Bank of Ghana.
Yes.
Okay. So you're saying, so in this case, the organization you mentioned is called PMMC.
Yes.
So PMMC only gets money from Goldbod from Bank of Ghana to buy gold for the Bank of Ghana.
Yes.
And you're saying they even identified 3 risks, all of which were to be borne by the BOG.
Yes.
The BOG will also record the gains or losses from this whole transaction on their books.
Absolutely.
Not on PMMC books.
No.
Okay, continue.
Now, PMMC, operational buyer and marketing channel. It helped buy, assay, and channel gold into the program.
Buy, assay.
Yes.
Channel gold
into the program.
Okay. So that was their job. Buy, assay, channel gold into the program.
Yes.
So they bring you the gold.
Yes.
How you sell it, at what price you sell it.
Yes.
Whatever you do with it, It's not their matter.
Yes.
All they have to do is take your money, buy for you, assay it, and channel it back to you. So they give everything back to the...
Yes.
Okay.
Aggregators / miners
Okay.
supplied gold into the state-backed purchase chain.
Okay. So aggregators and miners have only one job.
Yes.
So the miner will mine the gold,
Yes.
give it to the aggregator, they give it to PMMC. PMMC takes it to the Bank of Ghana.
Yeah.
Okay.
So the final point under this, under who did what, the key point here is PMMC executed important operational function,
Okay.
but BOG ultimately bore the central bank financial exposure.
Okay. So the entire financial exposure goes to
The BOG.
BOG. So BOG is, in this arrangement, was the only institution that can lose or gain from this whole arrangement.
Yes.
Okay. None of the others. The others, yes, of course, people will make some profits. The miners will make profit, the aggregators will make profit, but they will bear majority of the risk. Everybody will transfer whatever it is to the Bank of Ghana.
That's correct.
Okay. Okay. That was in 2021. Started in 2021.
Yes.
Okay.
So we move now to gold for oil and why it was introduced.
Okay. Now there was something called gold for oil that was sold by Dr. Baumia. Okay.
Gold for oil, G4O,
Okay.
was a government of Ghana initiative announced in late 2022 and operationalized from January 2023.
Okay. Announced in late 2022.
Yes.
Operationalized
In January
January 2023.
Okay.
Okay.
It was publicly championed by the former Vice President, Dr. Baumia.
Yes. Vividly, we all
The
recall.
purpose was to reduce oil importers' demand for US dollars,
Okay.
ease pressure on BOG reserves, stabilize the CD, and lower fuel price pressure.
Okay. It reduce oil importers' demand for...
US dollars,
Okay.
ease pressure on BOG reserves,
Okay.
stabilize the CD,
Okay.
and lower fuel price pressure.
Fuel price pressure.
Yes.
We all know what happens whenever fuel price goes up. So if we are able to reduce the pressure on the demand for dollars by, what do you call it, the oil importers,
Yes.
we're thinking that if we can do that, it will affect fuel prices ultimately.
Yes.
If it affects fuel prices ultimately, the Bank of Ghana will suffer, the economy will not suffer, nobody will suffer. That was our plan. That was that was their plan.
Yeah.
I was not with them when they were planning.
But it was done on your behalf.
Yes, it was done on our behalf. So ultimately, we will bear all the. Okay, so that was the plan.
Yes.
Oil for gold.
That was
gold for oil.
Gold, exactly. It used the existing BOG domestic gold purchase program as the source of gold or FX cover for petroleum imports.
Okay, so gold for oil depended on DGPP.
Absolutely.
The BOG's program.
Yes.
As a source of the gold that they were taking to use for this program. Okay.
Okay. So, how gold for oil worked?
Okay.
Gold bought under BOG's gold purchase program was used to support payment for imported petroleum product.
Okay.
So there's a barter channel.
Okay.
Suppliers willing to receive gold could be paid through gold metal account at a refinery.
Okay. Suppliers willing
Yes.
to receive gold
Could be paid with gold or through gold at a refinery.
Okay. So we'll send the gold to the refinery, they'll refine and use that gold.
Yes.
So refine gold to pay for the oil.
Good. That's the first channel. But the second channel is broker channel.
Okay.
Gold was sold to a broker. The foreign exchange proceeds were used to pay for petroleum product through an escrow arrangement.
So we took the gold, sell it to a broker. The broker will give us dollars. We use the dollars for the purposes of buying oil.
Exactly.
Okay.
Now, petroleum import required large monthly foreign exchange payment, about $350 million per month.
$350 million.
Yes, that's how much.
So in order for us to succeed, we either have to raise all the $350 million through gold for oil, or we raise a significant portion of it if we were to meet the objectives of it.
Yes.
Okay, so we needed $350 million per month.
Per month.
Okay.
This singular dollar demand from oil importers was seen as one pressure point
Okay.
behind cedi depreciation and fuel price increases.
Okay.
Gold for oil tried to use gold-backed FX to pay international oil suppliers while domestic fuel still generated cedi to replenish the purchase cycle.
Okay.
The intended result was lower direct FX demand by oil importers and more stable ex-pump fuel prices.
Okay. That was the intended.
Yes.
That's where we wanted to go with.
That's where
with this.
That was
okay.
yes. Yes. Where losses made? Yes, losses were recorded at the Bank of Ghana level under the gold program.
Okay.
The losses were not the same as saying PMMC standalone audited account made those losses.
Okay. Okay.
BOG carried the gold purchase, FX, sale, and accounting exposure because it funded and recorded the program transactions.
Okay.
Therefore, BOG, DGPP, G for R recorded major losses.
Major losses.
Yes, and
but all the losses were on BOG's
books. Yes,
okay,
that's correct.
Okay.
So that context is very important.
Yeah.
That context is very important. Yeah. Good.
That there were losses under DGPP.
Yes. Yes.
There were major losses.
Okay. Losses
under DGPP, under gold for oil.
Yes.
Okay.
So audited BOG loss figures. What BOG's 2025 financial statements show? BOG audited 2025 account reports a total net loss on gold deals of about 9.05 billion.
Okay.
That's 2025 audited accounts.
Okay.
Good.
Okay.
Gold for reserves accounted for about 8.85 billion of that amount.
Okay.
Gold for oil accounted for about 203 million net loss in 2025.
Okay.
After the oil trading side partly offset gold trading losses.
Okay.
BOG's overall loss in 2025 was 15.63 million. So the gold deal loss was material, but not the only reason for the bank's loss.
Okay.
IMF losses estimate. I hope you realize that the losses announced by BOG is different from the losses announced by IMF.
IMF, okay.
I'm unable to explain why.
Yeah, or the disparity.
Yes, I can't explain why. Now, IMF later 2026 analysis estimated DGPP losses at more than 1.7 billion in 2025.
Okay.
Equal to about 1.5% of GDP.
Okay.
The IMF says the 2025 losses were almost entirely linked to gold for reserve Dory purchases.
Okay.
The fund also said the losses were about 17% of the value of Dory gold sold by BOG.
17%?
Yes.
Okay.
Earlier IMF references to around 214 million covered only up to end Q3 2025. So they were not the final full year estimate.
Okay. Third quarter.
Yes.
Okay.
Why the losses occurred? The main drivers identified by IMF. The first one is exchange rate spread.
Okay.
Gold was purchased using a forex/market linked rate.
Okay.
But BOG accounting and FX sales use the lower reference rate.
Okay.
My understanding of this explanation was that if you look at the terrain at the time, if you want to use the BOG reference rate, it would not look attractive to the miners and
so the miners usually demanded the market rate.
So
yes,
if they didn't do what they did, they would have failed to prevent the smuggling that was going on.
Okay.
So using the forex rate was a strategic decision to make the whole process look attractive to the producers of the gold.
Yeah. Ultimately, that was the plan.
But
what the IMF is saying is that they were using different exchange rates for purchase and sales.
Exactly.
And recording. So let's say the exchange rate they used to buy was the market rate.
Yes.
But when they were recording, they were using their own reference rate,
exactly,
which is usually lower than the market rate. So that created some losses in that direction. Okay.
The second main driver IMF identified is fees.
Okay.
service and asset fees paid to Goldbod added to the cost of the program.
Okay.
The third is discount.
Okay.
Gold sold to off-takers / exporters involve discount that reduce net proceeds.
Okay.
Then the final one is IMF says some losses reflects valuation transfer effect.
Okay.
I'm
worry.
not sure.
You don't have to understand anything. Losses reflect what?
Valuation transfer effect.
Valuation transfer.
Valuation / transfer effect.
Okay.
So I think the last explanation I heard on valuation losses was from Adongo. I think it has to do with exchange rate differentials.
Okay.
Something like
it's
that.
About the same thing.
Yeah. So
Yes,
something
yes.
like that. But they still weaken BOG balance sheet.
No. Yeah.
Yes. So the valuation effect affected the balance sheet. So that led to some losses.
Okay. Okay.
Now, entry of Goldbod.
Okay. Okay.
What's changed institutionally? Goldbod was created under the Ghana Goldbod Act 2025 Act 1140 and became operational in 2025. It replaced the previous fragmented buying export structure for small-scale gold with a central statutory authority.
Okay.
So that means the terrain was fragmented.
Yes.
And then it arrived and then become the central authority that handled gold.
All of that. Okay.
Yes. From May 2025, foreign entities were no longer allowed to buy or trade artisanal gold except through a new licensed framework.
Okay.
Goldbod's creation moved functions previously associated with PMMC and other market actors into a more centralized gold trading and export system.
Okay.
Goldbod's mandate covers buying, selling, weighing, grading, assaying, valuing, and exporting gold and other precious minerals. In 2025, do you want me to retake that again?
No, go ahead.
In 2025,
No, go back to what you said.
Goldbod's mandate covers buying,
Okay, they'll buy.
selling, weighing, grading, assaying, valuing, and exporting gold and other precious minerals.
Okay.
In 2025, Goldbod acted as BOG's buying / aggregation / assay channel for small-scale gold under the Gold for Reserves.
So in 2025,
yes,
you're saying Goldbod acted.
Yes. As BOG's buying / aggregation / assay channel.
Aggregation assay
channel for small scale gold under the Gold for Reserves.
Okay. Small scale gold.
Yes, small scale gold under Gold for Reserve program.
Okay.
Goldbod reported handling about 103.8 tons of ASM gold valued around $10.8 billion in 2025.
Okay.
This helped formalize very large gold export volume and generated foreign exchange, but BOG bore the main program financial exposure.
Okay. And not different from what they inherited.
Yes.
Okay.
So Goldbod policy rejected claims. Sorry, Goldbod publicly rejected claims. We are talking about the
losses.
The claims that it made a loss, pointing to its audited 2025 surplus.
Okay.
BOG acknowledged that DGPP helped reserves and stabilization, but these gains came at a cost. From July 2026, Goldbod was expected to fully take over DGPP operations and cost, while BOG exits the quasi-fiscal financial risk.
We'll come back. I'll come back to you on this matter because, and thank you very much. There's a lot you have done there, going through the history of how we got the domestic gold purchase program and getting to where we've gotten to, where the Goldbod has become the center of attention. Executive Director for IFS, Dr. Said Boachi, has joined us on the line. They issued a statement yesterday clarifying